Perhaps it was artificial forces that drove the markets lower last week. However, this week, they seem to have disappeared. Traders and investors have all but forgotten about inflation and the Fed. What this means is that Tuesday's session is likely to continue the rally that started Monday, but as soon as they say that, the market's going to change its mind. So, what has changed between Friday and now? Only the mood of the buyers. News of the Fed's comments on inflation is last week's news. That's old. We don't need to worry about that this week. And since the economy looks pretty good, and with the sell off last week, investors are once again looking for bargains. But for us, it's always a good idea to take stock. So let's go back to the triple Q and take a closer look at the wedge. And we're now looking at the 4-year weekly chart on the triple Qs. And this is a continuation of our discussion from the weekly update. And in the weekly update, we looked at a pennant type formation. Some call it a wedge, some call it a triangle. Now, what happens is you have the cycle, the market cycles through here. And as it moves up through the wedge, it gets tighter and tighter. And at that pinch point, what often happens is a violent move either up or down. And I think we're going to have an upward move. So how do I come to that probability? Well, I cheat. How do I cheat? I pay attention. Let's go back here. In 2019, we have these tops through here. So you have your top line moving through like that, and then you have your bottom line moving up like that. The market cycles through, up and down, gets to the pinch point, and then pop. Now, let's go look for another one. Not necessarily as good, but you have that top moving through here, and then you have the bottom trend line moving on up, and then you get that cycle up and through, and it's not as clean, but you still get that pop up here. So this is a piece to the puzzle. Let's go look at the other piece. Volume's not going to tell you much, but the MAC is going to tell you a lot. Let's go back to 2018. There's a double top right there in the fast line, comes through, and then back on up, and then there's your pop. Here's a double top here. You get your move down below and up and through, and then there's your pop. And here's your double top there, double top here. You have your downward move, and so now all we're waiting for is the pop. Now, looking at this most recent occurrence here in 2021, you can see that the fast line came down here, moved on up, got reflected, back down here, and it's going to give it another try. Now we're above zero, well above zero, so there's a lot of strength. We'll go back to 2019. That move here also had a move on up that got reflected, so it came back down again before it gathered enough steam to head on up. I think the same thing is going to happen here. It maybe isn't exactly the same, but you can see that the market does rhyme. Now into the histogram, that's not going to tell you too much. Price rate of change, that might tell you a couple of things here. You get your double top, but basically you have your move down here and then up. Same thing here. You have a double top. You have your move down here and then up through. You got your double top, and this is actually a pretty big move, but you could say focus on this here. Your move down here, and the fast line has already moved up and through, and I think that's what's going to happen to the price chart. Now, these other oscillators aren't going to tell you a lot, but they're all above their zero or midlines, and there's a lot of strength in the market right now. So certainly here in the Williams, you can see that bottom there from the low we had in early 2020, and it's been up all the way. So very strong. So I think there's a lot of strength in this potential move. I think it is the probability. We'll just have to wait and see if I'm correct. but I think we have a couple of occurrences in the past that we can use as examples. So that's my thesis. Let's see if it plays out. And for today, that's ChewDog Charts. Thank you.